Hello there, welcome to Bizdateup. In this video, we are going to learn about how investing in startups is different from investing in stocks and which one you should go for. To understand better, let's look at the differences between the two based on various factors, startups and stocks. Liquidity in startups and stocks is different from one another. Stock market investors are well known for keeping a close eye on the market's rise and fall. Every day, hundreds of investors, experts advise people on whether to buy or sell their shares based on the market performance of the sector. The ability to buy and sell and exchange the listed shares is referred to as liquidity. Startup investments are not liquid in the sense that a private equity deal cannot be exited before a certain time frame. Now let's differentiate between the two based on volatility. If you're feeling discouraged about startup investments, think again. The stock market is not subject to the volatile moods of the market. They're protected from the macro level fluctuating market trends. Startups, on the other hand, consistently face high and lows of supply and demand, which makes investing in them much more exciting and gives the possibility of higher returns compared to the stock market. Apart from liquidity and volatility, the dividends investors enjoy from a startup and a stock market investment varies. If the startup you invested in made a profit, chances are that it will never reach your pocket. Young companies have a high requirement for self-sufficiency of finances. All the profits made are typically reinvested back into the business. The only capital gained by the investor then is through shares. Public markets, on the other hand, could re-remunerate the investors annually through dividends. So, for example, if you have invested in Bajaj Autos, you could be rewarded with a high dividend rate during the economic booms. These dividends can be in the form of either cash or shares, and they're distributed to the shareholders. In conservative or traditional settings, people chose those instruments to invest in, which could provide assured returns at a low risk, even if it meant lower returns. So a majority of people would typically choose stock markets. Although nowadays investments in stock markets are more popular, they are still not preferred by many since they are considered to be high risk with a high probability of losing money. People even get jitters at the thought of investing in startups since they are widely held. Misconceptions that startups are at an even higher risk than stock markets. It is true that both types of investments, startups and stock markets, involve high risk. But investing in a startup has some advantages worth considering. First of all, investors promote innovation by investing in startups. The core of a startup is innovation, whether it's a product design or marketing or business model or strategizing or problem solving. Investors get an opportunity to not only promote innovation but also become innovators themselves by providing unique insights, valuable feedbacks, and hand-holding support to the entrepreneurs. The second thing is that while investing in stock markets, investors must exercise caution and choose an appropriate time to invest. Investing in bearish or bullish markets have implications on returns, but the timing is not the issue with startup investing. The third thing that you have to take into consideration is that startups have a way of solving problems in the society. There are startups that offer life-changing solutions or disrupt the market in ways that benefit many. When investors put their trust and thereby their money in such startups, they are essentially contributing to social welfare and positively impacting the lives of many. Don't you also feel that supporting startups to make this world a better place? When you look at it, then startups also create jobs on a large scale. Through investments in startups, investors are essentially contributing to job creation, better income, and a better standard of living. Last but not the least, we can say that investing in startups make investors an integral part of a startup team where they input insights, domain expertise, and mentorship are sought of. It also gives investors a certain amount of power and control on the working of the startup. Let's sum up. Investing in startups instead of investing in stock markets will help investors diversify their portfolio, increase returns, reduce risks, and promote ideation and innovation for the welfare of the society as a whole. Similar to the other investment avenues, investing in startups should be done with careful consideration and after a thorough vetting process. Feel free to reach out to us and check our website bizdateup.com and join our community.